Hi, I am Paul Boursicon from DTZ, joined by Jingjing Ma.
Hello, everyone.
Jingjing and I work in the international capital market team of DTZ in London, which I head, and we concentrate on tracking key pools of capital globally, with a strong focus on Asian and especially Chinese investors into Europe. Last year has been a record year in terms of Asian investment and especially Chinese flow of capital into Europe. 9 billion euro have been invested by a mix of sovereign funds, mainly from China and Malaysia, institutions, insurance companies, Chinese insurance companies who can invest abroad since October 2012, and private investors. With our market leading position in China, we've identified 100 large investors who are keen to invest into Europe, investors coming from mainland China and Hong Kong, 100 investors with 40 of them keen to buy immediately around continental Europe. So I'll ask Jingjing. I mean, Jingjing is traveling every 2 months to China and Asia. What is the investment strategy?
Well, as you can understand, I'm a frequent flyer and to Asia. The Asia investors are mainly focused on the office market, which is evident. Out of the 9 billion euros you just mentioned, 7 billion were concentrated to office market. And another point is that really focused on the UK market at this stage, but we can estimate that in the near future, they will expand very rapidly to the continental markets.
And this is a very new trend which we saw since 12 months. I mean, in Germany and in France, we've seen significant investment from both Malaysian and Korean investors. And amazingly enough, not only in the office sector, but the logistic sector as well, especially in Germany. In terms of investor profile and investment strategy for Asian investors coming into Europe, we essentially see 3 main groups. First one are long-term investors buying core products at low yields, but with secured income. It's mainly sovereign funds from China, Malaysia, and a small number of insurance companies from China. An investment lot size shall be between 200 million up to €1 billion per investment. Second group, who's more looking for return net initial yield from 5% plus, and lot size between 70 million to 200 million euro per deal, are Hong Kong investors, Singapore, Korean, and a few Japanese. Third group, not to underestimate, looking for value add or opportunistic investments, are private investors, say Chinese developers, who have the capacity to buy or to invest up to €1 billion per deal, could be residential, office, or hotels. Jingjing, could you tell us how to attract such investors into Europe?
Well, I have to say that if you want to work with Asian investors, you have to respect their Asian culture. And what does it mean, Asian culture? Asians are more intended to work with people that they trust. And I have to say relationship is something really matters for this market. And you have to really build a strong and long-term relationship with them in order that works.
And what would you consider as the main challenge for them when they look at investing in that part of the world?
Indeed. Well, for Asian or Chinese investors, I have to say that you have to play the local rules, because this is a new market and it's not how it works in China. So sometimes our proposition to Chinese or Asian investors is to find a local partner who can help them solve the local issues and avoid making mistakes.
Thank you. So the cultural The culture element is essential in the relationship. That's why our teams, both in Beijing, Shanghai, Hong Kong, and Singapore, and in London, is a mix of Asian and international, say, European culture.
Exactly.
Well, thanks very much. This was Paul Boursicon and Jingjing Ma from DTZ in London today. Thanks for your time, and see you soon.
Thank you.